one of the things that you can also use to see whether Bitcoin is already done with its performance or not is the interest over time. So Google searches, and you see here back in 2015 and 16, interest at a fairly low level compared to the rest of this chart, and then it ramps up and it hits 100 here, and then it's at a fairly low level here, but it's many times the floor that it's starting from. Look at the amount of interest here. And so each time it starts from a much higher floor. And that floor, the amount of interest, is what drives it. So this is saying that we're nowhere near the top yet. At least that's what it's saying to me. Bitcoin managed to bundle its unit of account, the value of it, it's measuring things with it, with a payment system that lives on a ledger. So the settlement system where you transfer it through, the unit of account is a Bitcoin. The payment system is the Bitcoin system where I can send you a Bitcoin supposedly instantly. It doesn't always work that way. One time, I sold a different cryptocurrency on an exchange. I had to turn it into Bitcoin to send it over to Coinbase so I could turn it into dollars. During that time, it took over an hour for it to settle because it has to be buried behind a certain number of blocks before Coinbase will trust it and turn it into US dollars for you. And when I did that, it took an hour, and in the meantime, it had dropped more than 10%. I had a 10% loss during the time where I couldn't make a transaction, where Bitcoin was sort of frozen up. And, it's sort of scary when, you've got a lot of currency out there and it just vanishes. That's the innovation and why it obtained a value. And this is Jeffrey Tucker. Jeffrey Tucker, I've interviewed him, met him a few times. Great writer and analyst. I really like Jeffrey Tucker. But that's part of the value, is you have millions of computers running this ledger all over the world and creating this payment system. But that uses a lot of power to have this system. There are other systems that don't use a lot of power and are faster and are actually more secure. So that brings us to Bitcoin's energy consumption. And this is Digiconomist, and he's put together something saying that right now the annualized total consumption, the footprint, is 77.78 terawatt hours, which is comparable to the consumption of Chile. The carbon footprint, the amount of carbon emitted by burning that power, is equivalent to New Zealand. So that is how much carbon is being emitted into the atmosphere, the CO2 that's going into the atmosphere because of Bitcoin. The electronic waste from all of the mining rigs and so on that are used in it is equivalent to the country of Luxembourg. And a single transaction, when you buy Bitcoin or sell Bitcoin, it's going to consume the same amount of power that the average U.S. household uses in 23.5 days. It's going to have a carbon footprint that's equivalent to about 750,000 Visa transactions. However, I don't care for Bitcoin is much more well designed than credit cards. So credit cards, I really don't care for the way their network is designed and their transactions. And it creates the equivalent amount of electronic waste as throwing away 1.5 C-size batteries. And you go down further here, it's currently, according to the Digiconomist, consuming a little less power than Chile and Finland and Belgium, but a little bit more than Bangladesh, Austria, or Colombia. When you look at it compared to the U.S., it's only consuming 1.8% the amount of power that the U.S. consumes, but it's consuming 2/3 the power that the Netherlands consumes to run the Bitcoin network. And if you look at it's not as decentralized as it used to be, as people think it is. When you look at a close-up of this chart, This is where all of the Bitcoin mining is being done. The hash rate over time, hash rate is the mining rigs doing the mining. And when you look at this, it looks like it's a bunch of different countries. But the countries are Kazakhstan at the bottom, and then you have China, 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 Libya, China, 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 Malaysia, China, China, Thailand, Iran, China, 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 the rest of the world, the US and Germany. So overwhelmingly, the mining is being done in China. And then you look at the energy consumption, the reason that it's happening is this is the profit being made, the income being made by mining Bitcoin, 11.8 billion. And the electricity cost is 3.9 billion roughly. And so it's highly profitable. That encourages the mining. Without this profit, it wouldn't exist. Nobody would be wasting the energy running the computers. And the profit also creates an enormous competition of a lot of people doing the mining, and that adds the security to the system. It makes it very difficult to hack or something like that. But here it says a quick comparison between CBECI and the Digiconomist shows that they both agree that there's been about an 800% increase in the last 2.5 years in power consumption. Who is the CBECI? That's the University of Cambridge, their index. And so Cambridge University also does this energy consumption thing, and its country ranking. Currently, Bitcoin would rank, it's currently consuming 108 terawatts per year, it says here. The Netherlands is also 108, Kazakhstan 94. And so if Bitcoin was its own country, there's its consumption. This is China and the United States. But Bitcoin is on, I've watched it march along this thing over the years because I've followed the Digiconomist. Another thing, it shows a mining map, and you can get a visualization of this that's rather interesting. And it shows the rest of the world and China. The share of the total hash rate for China is 71.7%. So that's huge. This chart puts that more, well, here it's saying 65.08%. But you can see that it's overwhelmingly China. The mining always goes to wherever the power is cheapest, and it's cheapest in countries that subsidize the power. If the taxpayers are paying you to mine Bitcoin, you might as well mine Bitcoin. That's the reason that it's all in China. Now, there are other cryptocurrencies that are more efficient and burn less energy, and a whole bunch of them that have different uses. And basically, Bitcoin is not being used as a currency. It is a speculation. It's a store of value. Could it be a store of value that goes away? Is it vulnerable? We're going to look at a little bit more of that in a minute. But what we've got here is Bitcoin at 36,000. So this is CoinMarketCap, great place and to go to look at all of the different cryptocurrencies. And you can click on each one of these and it'll bring up a chart. And this is where you can click logarithmic if you want and turn off the market capitalization. And you can compare all of the other cryptocurrencies, and you can even price them in Bitcoin, which will show you when a cryptocurrency is leading or lagging. And that is very interesting because in the previous history, like the last run-up, the rest of the cryptocurrencies, most of them, Bitcoin was the star, and it ran way ahead of everything else. And the rest of them lagged. They were dogs compared to it. But then they far outperformed, a lot of them, not all of them, but a lot of them far outperformed Bitcoin. And I have, full disclosure here, I own some EOS. And EOS, if you price it in Bitcoin, you'll see that it is, I'm going to turn off market cap. So priced in Bitcoin, that's the yellow line. It's getting cheaper and cheaper and cheaper, which means Bitcoin is outperforming it. But what you see here is that Bitcoin is outperforming it, and then it's underperforming it. And then it's outperforming it and underperforming it, and outperforming it, and then underperforming it, and outperforming it, and under. So it just goes back and forth. One of the things, a strategy you may want to employ if you're interested in this, is to find something that's going to catch up with Bitcoin eventually. And this is a good place to look at that. For me, Blocktivity.info, this is one of the ways. Cryptocurrencies are extremely hard to put any type of value on. This is one of the ways that you can do it. And EOS, this is the activity in a 24-hour period. EOS has had almost 60 million operations. And then Proton has had 6 million. This is a fork off of EOS, Telos. And I have a disclosure here. I own Hashgraph. It's had 3 million in the last 24 hours. Ethereum 1.2, Bitcoin 950,000 roughly. Bitcoin just does not have the capacity to do really big things. I do believe that everybody talks about Bitcoin, and big funds and stuff are now getting interested and buying Bitcoin. And as that happens, Bitcoin will rise. But over the next consolidation period, after the next peak, when it goes into a consolidation, I think a lot of those companies are going to discover certain advantages to things like Ethereum, Hashgraph, and EOS, and a few of the other cryptocurrencies. Now, if you scroll to the bottom of this page, there's something extremely interesting. Here are the operations made by the major blockchains, and this is EOS with 76% of the transactions. You can turn different, like I can turn off Bitcoin and Ethereum here, but it's listing them in the same order as the top of the list. So it's listing them in the number of transactions, the number of operations that have been done in the last 24-hour period. And 76% of all that processing was EOS. And then you have Hashgraph is there at 4.1%. Bitcoin is only 1.2%. Then you scroll to the next pie chart that they've got here. The same cryptocurrencies here, but now you're looking at the market cap, the value, the total value of all of the Ethereum. And you can see here, EOS is 0.4%. It's doing 76% of the work, and it's worth 0.4%. Bitcoin is worth 81.8, so 82%. Ethereum is worth 16.5% roughly. Hashgraph doesn't even measure on here. It is it's less than 0.1%. So it measures as it rounds out to 0.0. To me, these have opportunity, but this is just one way of measuring it. That's one of the reasons that I own both Bitcoin, Ethereum, but I also own EOS and Hashgraph, and some others. So can Bitcoin go to zero? Well, this is from 2018. And there was a denial of service vulnerability, a bug, and an inflation bug that was discovered in Bitcoin. And an anonymous developer disclosed this to the Bitcoin Core team so that they could fix it. Now, he could have used this inflation bug to just create Bitcoins out of thin air and make himself a hectamillionaire, a billionaire, whatever he wanted. He could have done that, but he didn't. He disclosed it, and it turned out later that he was a Bitcoin Cash developer and Bitcoin Unlimited. Those are both forks of Bitcoin. And a denial of service attack. What is a denial of service attack? A denial of service attack is an attack meant to shut down a machine or network, making it inaccessible to its intended users. Denial of service attacks accomplish this by flooding the target with traffic or sending it information that triggers a crash. In both instances, the denial of service attack deprives legitimate users of the service or resource they expected. And so, yes, Bitcoin has been described as a spaghetti code that isn't in little modules, that's written in a certain method, is very hard to update, and every update has the potential of inserting vulnerabilities that are then very hard to detect and fix. And so this developer had come across some code that got inserted during an update that made it very, very vulnerable. And so what happened was all of the developers were told all of the miners that run the nodes were told to upgrade to 0.16.3, and that it was a denial of service bug fix only, but it had leaked out that it was also but nobody had. Luckily, it says some miners and nodes already upgraded their nodes by that time, so they could reference these blockchain producers where they knew that everything was free from somebody gaming the system and minting themselves a million Bitcoins or whatever. And later, they ran a test on this code, and it was discovered that you can mint Bitcoins out of thin air, but it was all fixed back in 2018. But what it comes down to, that the duplicate input vulnerability shouldn't be forgotten. He considers this bug to be an undeniably major failure in Bitcoin, and encourages the community to start a constructive discussion on the reasons for this failure and a strategy to avoid these kinds of critical bugs, because that's plural, in the future. And so, yes, Bitcoin could fail when other cryptocurrencies don't, but could all cryptocurrencies fail? Yes, I urge everybody to watch. The cyber pandemic has begun. SolarWinds plus FireEye. Anything can happen now. And this is an enormous hack that has happened that has the possibility to bring down the power grid, the banking system, and SWIFT. Now, one nice thing, Bitcoin and any cryptocurrency that's got a whole lot of computing power happening, where there's people competing to mine that cryptocurrency, like Bitcoin. If the entire internet goes down, but somewhere in the world there's one computer running, the whole thing can be restored off of that one computer. And that makes it very resilient when it comes to power outages. The power outage would have to be worldwide and then have to go on years, to where somebody that isn't running off of solar power, that actually is running a mining rig, running the ledger, if that computer still existed when the power came back up, Bitcoin could be restored. But if it stayed down long enough to where that was gone, Bitcoin would be gone. Gold and silver are not. But what's even more scary, there is a documentary that's going to be released soon called Black Start. I urge everybody to watch this documentary. It's extremely important. It's about the vulnerability of the power grid. And when you don't have power, you don't have cryptocurrencies. This is one of the reasons I invest in both. They are both good. Anybody that badmouths one or the other, in my opinion, is wrong. I like to have both. And what my strategy is having cryptos. Cryptos they're very volatile. They run very far. And when they do, it isn't a bad idea to take a little bit of profits from your cryptos and plow that into something that's three-dimensional, has weight, and cannot vanish when the electricity vanishes, or if there's a hack. It's still going to be there. And that's what happens with my gold and silver, and that's what makes me sleep well at night. And here is to wishing all of you a good night's sleep. Thank you very much. I'm Mike Maloney.